My name's Anthony Peluso, CEO and founder of Wealth for Life. And I want to come out and talk to you guys today about the property market, an area where we are the experts in, especially when it comes to real estate investment. And, you know, we're getting a lot of questions right now in the current climate with this coronavirus out there, with regard to the property market and what the property market's going to do. Is the property market going to continue? Is it going to move forward? Is it going to crash? Is it going to pause? So there's a number of different viewpoints that are getting thrown out there. What's going to happen with tenants and the new policy that the government introduced in Melbourne anyway. Yesterday, I believe it was, where we can no longer remove tenants from a rental property for 6 months if they don't pay their rent. So a number of different aspects with regards to this, but it is actually a moving target on a day-to-day basis. But one thing I am going to talk to you about is the property market and where I see it going. Now, for those seasoned investors out there, you'll understand where I'm coming from. But for some of you guys that are just new to the investment game, you probably won't have that background that I'm going to share with you right now. You know, I've been investing in real estate, as I said, for 20 plus years, 23 years. But I've been studying the real estate markets in Australia, predominantly Melbourne and Sydney, for, you know, going back as far as 1960. Now, the one thing I'll tell you is this, that as a country, when it comes to the property market, we have been in this position before, okay? We've had much tragedy and doom and gloom. I got a letter out to most of our database talking about this, but over the last 60 years, and our property market has continued to perform in a predictable way and grow over all of that doom and gloom. So what do I mean by that? Well, if you go back as far as, say, 1982, right, for those of you that can remember, how old was I back then? 5? Back to 1982 when AIDS was discovered, right, as a virus, right? And the word back then was that, you know, this virus that's come out is going to sweep the globe, killing millions of people and crashing, you know, markets all over the world, you know? And if you're in Melbourne and Sydney, and I'm just going to talk about the Melbourne and Sydney markets here, actually the Australian market in general, the market grew by 3%, okay, in that period of time. Not phenomenal growth, but it didn't crash like most people were actually predicting, right? Forward to 1985, where the government in Australia introduced capital gains tax. You know, and the word back then was that, you know, nobody wants to pay capital gains tax when they exit out of a property, so the property market's going to crash. You know, the property market as we know it is doomed forever, right? And again, in 1985, our markets grew by 6% and a bit. And you forward to 1987, and we had the stock market crash here. Well, actually all over the world. Our markets in Melbourne and Sydney did 23% in 1987. All right. In 1988, there was I think if you recall the airline strike, I think it was Ansett, or the airline strike in general in Australia, and our markets again grew by 25% in 1988. Pilot strike, yeah, thanks, Lee. 1989, interest rates hit 17%. You know, I remember having conversations with my father. I was a 17-year-old kid, and he's paying 21% interest rates for the mortgage on his home back where we were in, I think we were in Box Hill at the time. And now, at that point in time, the market leveled out. It kind of stayed neutral for that particular year. 1990, real estate prices hit records high again. And that's when we started to have, you know, that's when the concept started coming out that, you know, our kids are not going to be able to buy property because the market's really starting to take off. And it's a dream that our kids will never be able to share. But the market did well in 1990 again. You then fast forward to 1998 and we had the Asian economic meltdown, okay? Banks started to take possession of some property. But again, in Melbourne and in Australia, we had a market grow by 14%. Okay. Y2K, I remember this very, very well. I was working at Telstra, and I used to hear some incredible concepts of what was going to happen when we flipped from 1999 to 2000, right? The whole Y2K, from computers crashing all over the world to aeroplanes falling out of the sky. It screwed up with everybody's New Year's Eve, by the way, right? And, we had a 12% growth in the year 1999, right? 2000, 15% growth, right? And that's when we had GST introduced. So again, that was freaking a lot of people out. Fast forward to 2008, right, with the credit crisis and the global financial crisis. I remember having a meeting with an associate of mine, and when word got out that the subprime mortgage in America was going to close down half of the banks and half of the financial institutions and cripple the American real estate market, which to some degree it did. I remember an associate of mine going into a panic and getting rid of all of his real estate. And I just remember sitting there with him over a coffee thinking, this doesn't make sense. And, understanding the market even back then quite a lot. And of course, what happened? In 2009, our property markets went through the roof. Melbourne and Sydney did 13% growth a year later. So guys, why am I telling you all this? Okay? Do your research. We've been here before. And we will be here again. Okay, we've been here before. We had the SARS virus, we had the bird flu, the swine flu, so many different types of let's call it human tragedies, doom and gloom stories that have predicted to crash markets and impact financial well-being all over the globe. But the reality is that as a society, we're actually quite resilient. Our governments and we put things in place, okay? And the one thing about real estate is this, that people are always going to need a roof over their heads, okay? Don't forget that, okay? It will always be a very sound wealth creation strategy for Australians and most people all over the world for that reason, okay? It's safe, it's secure. Can you lose money in real estate? Of course you can. Okay, you can lose money in anything, okay? But it's generally considered very, very, very safe because people are able to predict its behavior, especially over a long term. Okay, so I'm going to say that again. Most people around the world are able to predict the behavior of real estate over a long-term period. And if you're an investor, like I think I said even last week, you don't look at real estate as a short-term investment proposition, okay? Because no one can really tell you what the market's going to do over the next 3 months, the next 6 months. I don't care what you read in the papers, okay? I can't, okay? And most experts I know can't, okay? It's one of those things, when you pick up the media, what they usually do is give you a very short-term view of the world. Okay, they'll either tell you what the markets have done over the last 3 months, the last quarter, the last month. And I mean, guys, really, who cares? Okay, real estate should be a long-term view. We will get through what we're going through, as I've been saying all along. Our markets are going to do very, very well because the thing that underpins our markets are employment, interest rates, consumer confidence, and the real estate, and that creates the demand, the supply and demand, okay? If you have a look right now, employment's probably the biggest X factor. And if I was going to give anything attention, it would be employment. As a country, we need to keep our unemployment figures down, sitting at below that 5%. Is that a concern with what's currently going on in the market? Sure it is. There are people that are losing their jobs, absolutely. But you've got the government as well with their fiscal stimulus packages that they're putting out right now to be able to protect a lot of that. Okay, but that I would see as the major hurdle to overcome with regards to where our market's going to go, real estate market's going to go moving forward. Interest rates, as I said last week, guys, all-time low, haven't been this low since 1969. Banks, for the first time, you start to see a lot of banks that will cooperate and work with investors as opposed to just owner-occupiers. It's still not a lay down misère that anybody can get a loan these days, okay? Your financial house needs to be in order, so don't go thinking that anybody can walk into a bank and get a loan. That's what happened in America back in 2008. For heaven's sake, they were giving away, you could get a home loan from 7-Eleven. I mean, think about it. I mean, that's just doomed to fail. If you can get a home loan application from 7-Eleven and get approved, it was ridiculous, right? And our banks just don't operate like that. They're a lot more stringent. They're a lot more... their lending criteria has always been much, much better than anywhere in the world, okay? That's where their rating is so strong. And after the global financial crisis, a lot of the economy started to look at what Australia was doing when it comes to lending practices. So, I actually, as a mortgage broker and as an investor, I love the way our banks operate. Yeah, they can be frustrating for a lot of people to deal with. I get that. But their lending practices and their lending criteria, they protect you, the consumer. Okay, they protect you, the consumer, the investor. If you get a loan through an Australian bank, believe me, you've earned it. Okay, their criteria is strict, absolutely, the way it should be. The people that deserve a loan will get a loan. The ones that don't shouldn't, for your own well-being, for your own safety. So I love the way our banks operate, and I stand behind them. I think they do a tremendous job. Yes, they can be frustrating to deal with, but so can all of us, right? So they've got good practices in place to protect you, the borrower, the consumer, the investor, right, the homeowner. But you can get through that. If you can get through that lending criteria, their interest rates are very, very attractive. And as of right now, rents are still very, very strong. So I don't believe our market's going to crash like everybody's predicted. I mean, it's the first thing they talk about. One week's worth of data and bang, the market's going to crash, okay? We've been here before. We've got a track record of going through similar crises before, which, by the way, contributed to more deaths than, and I don't want to speak morbid right now, guys, right? They contributed to more deaths and doom and gloom and horror than, the current coronavirus has done. And we got through it as a society. Yes, we probably haven't seen some of these measures that the government's taken take place before. But for you seasoned investors out there, right, that have seen this before, you know that we've come out of it. You know that the market's done well. We've all survived it. We've all grown better for it. So I'm going to send you that graph that, I think if you're on my database, I sent out a letter last week. And I'm going to send you that graph of where the Australian property market, what it's done over the last 60 years, and all the turmoil that we've had to navigate throughout to get to where we are today. And we've got a very strong market, a very resilient market. And I can tell you, and you can quote me telling you this right now, guys, our market is going to do very, very well over the next 5-6 years, okay? I don't see anything stopping it. I have my, I've done my research, I've done my due diligence on it. I know the factors that underpin the property market and drive the property market. And as a country, we are strong, okay? So we're going to get through this. Real estate is still a great investment vehicle for long-term wealth creation. Don't get taken out or distracted by some of the stuff we're going through right now. Sure, you're gonna have to change your operating behavior, but again, like I said last week, have a look at how you can right now build a better you. Learn some lessons from what we're going through right now. Because right now, I was having this conversation with my wife actually this morning. People's true characters right now, the character of an individual right now is getting exposed. Who you really are, what you really do, is right now coming to the forefront. Okay? So pay attention to the lesson that you're getting a lesson right now one way or another. Hopefully you're paying attention. Pay attention to the lesson that you're getting taught right now. It doesn't have to be a bad lesson. It can be a great lesson. And look at where you can improve areas of your life. Okay? With regards to your finances right now, your cash flow, your work. Have a look at how you're contributing to your employer. Okay, are you adding revenue to your employer's bottom line? Are you contributing to their promotional activity? Because right now, we need each other as a society more than ever. We need to support each other. We need to work together. Now is not the time to be arguing, to be fighting, to be working against each other. This is where we need to pull together as individuals, as communities, as a society. So have a look at what you're doing as an employee, right? Have a look at what you're doing as an employee for your organization. And for all the employers out there, have a look at what you're doing to support your staff, to support your employees and to get them through this, because, I'm an employer and I'm so proud to be an employer. You want to support your staff. You want to make sure that, I take responsibility for my staff, right? Good, bad, and indifferent. And, they're relying on us as I'm relying on them. So we all need to do our bit as a society to look after each other right now and to support each other, to help each other. Because, for a lot of us, we're seeing this for the first time, right? For those that haven't been through this, for, the younger generation, we're seeing this for the first time. So it can be quite scary. So this is where, as a society, we really need to support each other, both financially, emotionally, spiritually, mentally, and if we do that, I think we'll all get through it for the better. But, just pay attention to the lesson right now that we're all being handed out, so we can be better for it at the other end of this situation. So, guys, I hope you've enjoyed this episode of Ask Anthony. I love your feedback. Thank you for your shares and your likes and all the communication you give back to us. I'm going to post a copy of that graph, what the market's done over the last 60 years. And we're holding an online webinar next Wednesday night, I think it is, the 8th of April. Log in, sign up for it. We're really going to mix it up a lot and give you a lot of information that's relevant to what's going on in society, in the world today. And, really give you, the listener, the best opportunity and the tools you need to really survive and thrive in this current environment. So, thank you guys again. I so much admire your support, all the support you guys continue to give me, my company, Wealth for Life, my staff, my family. So much admire your support. We're, as an organization, we are getting inundated for people wanting to create wealth right now, because, for a lot of people, they're seeing this as an opportunity to do something they probably haven't been able to do before. Okay, so thanks, guys. Appreciate your time, and I'll see you around the same time next week. See you later.